Good afternoon, everyone, and thanks for attending today's XBRL US webinar, Creating Quality Financials for Institutional Investor Use. My name is David Torriello. I'm Vice President of Operations at XBRL US, and I'm going to step you through our list of panelists here today and an agenda, and then turn it over to our presenters. Before I do that, just a couple of housekeeping pieces. If you have any issues relative to your connection to our meeting today, you can send us a note at info at xbrl.us. We'll do our best to try to get you squared away. If for some reason you're unable to retain a connection to the meeting today, please note that we are recording the session. We'll post it on our website and send a note around as soon as we're able to get it out to you that the replay is available to you. Third, some of you are participating today for CPE for this meeting, and I would ask you that when you see CPE questions, polling questions appear on your screen, you read the question, choose from the responses that are available to you and make your selection, and then hit the submit button, and you're done. We'll take a break at a couple of points during today's presentation to answer a series of polling questions. Those polling questions are required for your participation to earn CPE relative to today's session. In today's session, we have three panelists with us. Vladimir Sully is a Senior Content Specialist for Thomson Reuters. Lou Roman is the Vice Chair of the XBRL US Data Quality Committee. He's a Vice President at Merrill Corporation. And Mike Starr is the Chair of the XBRL US Data Quality Committee. He's also a Vice President, and he is at Workiva. Our agenda for today's meeting is to review the new rules that have been approved by the Data Quality Committee, and also get a demonstration of how to run the rules, and a little discussion from Lou on how to correct the issues that you see that result from running those rules. We'll pause for a couple of CPE questions, as I indicated a couple of minutes ago. Then Mike and Glad will participate in a discussion. Mike will lead a Q&A session with Glad. We'll do a few more, couple more CPE questions, and then we'll open it up to questions from our participants here today. With that, I'm going to hand it over to you, Lou, to talk a little bit about the Data Quality Committee.
All right, thanks, David. The Data Quality Committee, what is it? Well, it's a group that was created by the Center for Data Quality of XBRL US, and its mission probably describes it best on this slide. And that mission is to develop freely available guidance and validation rules to eliminate inconsistencies and errors in XBRL data in order to enable automated analysis of the data. So that mission is key because it takes into account both the preparers of the data and users of the data. So if you go back and look at the last part of that, go back one slide and look at the last part of that statement, you'll notice the end part refers to users because it says we're going to enable analysis of the data. And that's key. We've gotten key input from users, and that's been very important to the Data Quality Committee. But the third word of the mission, notice it says freely. One part about these rules is it's freely available, meaning free of charge to public companies if they want to use it to run their files into these rules. So big key that there's truly no cost for a public company to do this. So to fulfill that mission, on the next slide, I want to show you who the participants are in this Data Quality Committee. And if you see, there's four basic groups, analysts being the first one. Those are the people that are using it to analyze for decision making for equities. A second group of users is the financial data providers. And again, it's another user of the data. So the DQC has been quite key in getting users to say what is working, what isn't working. It's been very important. Some of the companies that are on the Data Quality Committee that fit these two categories, S&P, Capital IQ, CalcBench, Audacity, another Credit Suisse Holt, and Bloomberg. So some names that we're very glad to have on our group. A third group that's a member of this data quality committee are the public company SEC filers, so actual registrants. And it's very important for us to get a preparer's view, obviously, as to, when creating the rules, good to talk to the people that are actually creating the disclosures and working on the tagging. A fourth group of the members is the filing agents and the XBRL creation tool providers. They're a key part of making the whole thing work. They're also a very key knowledge base and a good base of the SEC rules and XBRL itself. In addition to these four on the DQC, we also have representatives from the CFA Institute, from the AICPA, and also Vanderbilt University. And then we have two permanent observers of the Data Quality Committee, and rightfully so, that's the Financial Accounting Standards Board in the US, and then also the International Accounting Standards Board is a permanent member too, so we're glad to have them. You can see the members consist of a very wide range of skills and interests. So what does the group do when we get together? That's on the next slide, and there's three basic things. We develop unambiguous guidance on how to tag financial data using XBRL and freely available automated validation rules. So we're developing rules, which the intent is to improve the quality and the consistency of the XBRL that's being submitted to the SEC. I just want to add here that using these rules and running these rules doesn't mean that all 100% of your errors that could occur have been detected. There's still a need for human involvement to check for errors, but these rules are a significant move to improving quality and are significant in helping make sure there are no errors. A second activity of the Data Quality Committee is that we obtain input through public exposure of the proposed guidance and validation rules for a 60-day period. So that's part of our due process, is to allow a public comment period when we do and when we're getting ready to issue rules. A third and last activity here on this slide is that we have regularly scheduled meetings with the SEC staff. And you may say, well, big deal, why is that important? It's important to have the SEC involved. And I will say the SEC is well aware of the DQC and its activities, and they meet with us regularly to hear what the DQC is doing, what we've noticed, and to trade thoughts on the different topics that are related. So SEC's involvement is really key to the success of the whole thing. It's important to have them. They can't be a member of the DQC. That would not be appropriate or practical, but it's great that they are very aware and are involved in meeting with us. So if you take these activities that I'm showing here and you mix them with the people from the prior slide, what happens? What do you get? Well, you get what's on this slide. You get rules and guidance. So the Data Quality Committee has issued, so far, 3 sets of rules have been published. The first one in November of 15, then September of 16, and now most recently in January of 17. And I'm going to focus a little bit on the third set of rules because those are the current ones. But on the first and second set of rules, the first set of rules, there were several rules within it, but one of the key ones was that certain tags from the taxonomy can never be associated with a negative amount. So if you are tagging a negative amount, certain tags you should never use. Certain tags work for negative and positive. A tag like net income could be a positive amount or a negative amount, but there's others that only should be positive. So that was a key rule that improved quality quite a bit once people started following and watching those rules. The second set of rules, the key one was that certain tags, access tags and member tags, together create an invalid combination. So there were too many filings with invalid combinations, and these rules, fortunately, detect when that's done within a filing. So let's go to the next slide and talk about the third set of rules, these recently issued ones that really should start being used now. The first one of the 2 key types of rules that are here is that we added over 3,000 elements into the rules that says you can't have a negative amount with these elements. Now, remember I said that first set of rules had some of these as well. It had over 2,000. Now we added 3,000, so there's over 5,000 total elements that are in these rules, whereby if you use them with a negative amount, it's going to throw an error message to you to say, I think you have a problem here. A lot of examination and effort went into determining these tags, and I can say that each one of these 3,000 tags has truly been examined, and these rules are, they're legitimate, and for lack of a better word, I'll say these rules are solid. I mean, don't think that they were gone over quickly, rather it was much the opposite. So the second thing within this third set of published rules is that we added additional rules that say this is an inappropriate access member combination. And there were 3 access elements that primarily were specified within this third rule set. And those are here, the equity components access. That's an access tag within the taxonomy. And the rule in the third set here is saying only use members that are already on the US GAAP taxonomy that are shown under this axis. So, and there are a few exceptions to that, and those exceptions have been put into the rules. But there were a lot of problems with the equity components axis. People, you'd think the equity components would be retained earnings or additional paid-in capital, common stock, so forth, but many other things were being used as equity components, which were invalid and were goofing up the analysis by investors and analysts. So you can see we're getting input from them as well as from people who understand the taxonomy and accounting as well. The second one is the statement scenario access, and again, only use the members in the US GAAP taxonomy that are under this axis and no others. And the same with the range access. A lot of things are being put on the range access that weren't appropriate, and the only appropriate things are those members that are specifically stated in the US GAAP taxonomy that are under the range access, which are minimum, maximum, and weighted average. Those are the only 3 that should be used. So these rules will catch anything other than those and show you, here's an error message, something needs to be changed. One thing I want to do is show you an example of a disclosure on the next slide and explain a few items related to it, because I think examples tell a lot. This is the investing activities section of a cash flow statement, and the line that says proceeds from sale of equipment, let's put that in red. So yeah, there it is. That line is one of those things, if you use the appropriate tag, that tag can only be tagged with a positive amount. And that makes sense because proceeds from the sale of equipment, you're never going to have negative money from the sale of equipment. And if it is, it's something else. But in this case, I want to also show the extreme nature that we've gone to on these rules is that the first column here is the parent, 10. So that's a positive amount, no problem tagging that with this tag. The second one is positive, 232. There's a negative here, and the proper way to do this is to put in the first amount, 10, as a positive, the next one is a positive, this 10 here under eliminations as a negative, and then the last one is a positive. Well, when you put that in as a negative and use this given tag, I would look at that and say, problem, I just put a negative in one of the tags that the data quality committee said I can't put a negative in. And so the data quality committee understands that issue and realizes this and knows that it's proper to put in a negative 10 here. Therefore, we've written rules into quite a bit of depth on this one, especially to say for that 10 that's sitting there that's negative, if the rules say if it's in the elimination type column and there's elimination members or anything like that associated with that tag, then fine, it's not a problem. Don't flag it as an error. So if you tag this correctly, the rules would look at this and say that 10 is okay because it's part of an elimination member or elimination column. There's enormous amounts of depth like that have been put into these rules, and that's why I tend to say believe in these rules. There's been a lot of intelligence put into them. 2 other key points that I want to bring up about the DQC rules are on the next slide. And the first one is that for errors that are flagged, the rules provide understandable guidance. So the rules really aren't valuable if the errors put out something that's either too technical, too complex, or is not understandable. So some something we've worked hard on at the Data Quality Committee is for the error messages, make them understandable. And the second thing here is that the rules have been scrutinized, as I said, up and down. But if you believe a rule produces an incorrect error message, please email info@xbrl.us. Reason being, we want to know if there's anything that is incorrect in the errors. And I'll be the first one to say, all the errors are correct. There will never be an incorrect error message. But as soon as you say that, you know somebody somewhere somehow is going to find some exception. And if that's you, please let us know. We want to know about these types of situations. With that, I want to do a quick demonstration of how easy and the way that you would go into the data quality rules and run them. So David, I know you've passed it over to me. Let me know if you can see my screen.
I can see your screen.
Okay. Okay, what I have here is the XBRL US website. And if I go to the URL and put in xbrl.us checks, I'm going to put in check instead of checks. What will come up is the screen that we go into to check a filing. And this will always pop up, and I'm logged in as a user, which you will need to do if you haven't. And a public company can do this as well. But these terms of use are not painful. I'll just put it that way. But if I accept them by clicking off of them, I get this screen that says check your filing with data quality rules. And the first thing says this secure free service requires an XBRL US web account and is subject to the terms by XBRL US members who can do it freely, and also any public company personnel or individual can come in here and do this. I'm going to browse to find a given file that I've got ready here and put that in. And I'm going to just simply click check the filing. It's this simple, amazingly simple. Well, this filing does have some errors. If it showed nothing here or just said there are no errors, you'd see that. But in this case, there are errors. The blue section, this first blue section, is one given error. The white section below it is a second error. And the blue section below it has a third error. So let's go down. There's 3, 4. There's 8 errors in this one. So unfortunately, there are errors, but fortunately, there are some because we can take a look and use it as an example. At the top, it shows the date today, and it says the extension member, more than 5 year from balance sheet date and thereafter member, as chosen by this company, is used on the range axis with the element inventory valuation estimate with a value of 0. That's just giving us factual information about what it's seeing. The key is the next sentence, which says extension members should not be used with the range axis. And that's really the key takeaway here, is that you've used the range axis and you put an extension or unique tag or member on it. And as we said before, only the ones in US GAAP taxonomy should be used. The related stuff under here just shows you more information about how to exactly find that specific data point that it's referring to. So those are 8 error messages. That's the first one. The remaining 7 look like they pertain to the first one. So fixing the first one overall would probably resolve all of these in this filing. So before filing, this should be run, then this would be corrected, and then subsequent to that would be submitted to the SEC as a legitimate filing. So that's a rule check. It's truly that simple to do it. And as I said, it's free. One other thing I do want to say about the rules is to get involved. And there's 2 main ways you can do that. One is by, during that 60-day comment period, anybody's permitted to provide comments to help out, and those comments are taken seriously and adjustments are made as appropriate. And then secondly, improve the quality of your XBRL submission by running the rules before filing. The goal is to have no error messages in any SEC filing and to have everybody run these rules and correct the rules that are detected. I know that's a lofty goal, but why not? Companies should be running these rules. So go ahead and run the rules, improve the quality of your XBRL. And with that, David, I will hand it back to you.
Great, thanks, Lou. Let me bring my screen back up. Just to remind everybody that the URL that Lou took us to is xbrl.us/check. That'll bring you to that checks interface. And one of the things that was on your screen when you were looking at those results, just to kind of drive home the point, on the left-hand side, the first two columns, I think it was, are indications of the specific rule number. And there are plain language versions of these rules that are posted to the XBRL US website as part of the public exposure process. So it's not a matter of having to wade through the programming that goes into creating those rules. There's actually a plain language version that provides some comprehensive background for the decisions that are made by the Data Quality Committee to put these rules out for public exposure. With that, I'm going to move to a couple of CPE questions. Again, for those of you that are participating here today to earn CPE, our first question is, what is the mission of the Data Quality Committee? Is it to develop guidance for issuers to eliminate inconsistencies and errors in XBRL to enable automated analysis? Is it to develop software tools that issuers can use to extract XBRL data for peer analysis? Or is it to build tools that analysts can use to work with XBRL data? Take just a couple of seconds here to choose one of those responses to the question, what is the mission of the Data Quality Committee? All right, I'm going to close up that question and bring on a second question. Second CPE question, which of the following is not part of the latest Data Quality Committee rule set? Is it negative values with dependents? Is it deprecated elements? Or is it document period and end date issues? Which of those is not part of the latest Data Quality Committee rule set? Again, take just another second or so, make your selection if you're qualifying for CPE today. And I'm going to end the polling here. Thanks, everybody. And then I'm going to go back to our presentation and bring on Mike Starr and Glad Sully, who are going to have a dialogue about some of the institutional uses of the data. Mike?
Thank you, David. Good afternoon, everyone. Glad, how you doing? You ready for some questions?
Hi, how you doing, Mike? I'm doing very well.
Good. I'm doing well. So why don't we start with this question? Just give us an indication of who uses financial statement data, how they get it, and perhaps why they get it, however they get it.
Well, the uses of financial data runs the gamut from sell-side firms such as investment banking or brokerage firms or corporations, as well as buy-side firms such as asset managers, hedge funds, mutual fund companies. And ultimately, the use of this data is for them to do peer-to-peer analysis, as well as company-specific analysis on their financial results, and help them make their fundamental investment decisions in terms of buying, selling, and holding certain securities. They receive this data in multiple forms through different platforms. For ourselves, we have Icon. We have a number of different other delivery mechanisms. They may ingest the data into their models, into Excel or spreadsheets, and also transfer protocol files. So they may receive the information in a lot of different formats, but ultimately it's for them to do analysis and compare financials.
So this may not be a completely fair question, but I'll ask it anyway. When you look at data consumption, Glad, and how much of the data that's consumed today is obtained from data aggregators? Would you say is it 50% of it, 60, 90? What would be your guess?
I'd say a large percentage of it is acquired from people such as ourselves. I wouldn't hazard to give a specific percentage, directly, but the vast majority of the financial data in the marketplace is either provided by ourselves or other data providers in terms of the collection process.
And for your customers, do they know where and how you get the data? Do they understand your methodology or how you ingest the data to give to them?
No, they know the structure and the nature of how the data is collected in terms of how we provide the data in terms of our as reported and our standardized reporting formats, but they don't necessarily know that some of the data may be provided from XBRL or HTML or PDF. They know it's provided from publicly available financial data, whether it's from an earnings estimate or from a 10K or 10Q. But ultimately, they don't necessarily know the format by which it's been extracted from, whether it's been extracted from an HTML document or a PDF document or an XBRL document. Ultimately, they want the data to be accurate. They want the data to be timely. They want the data to be consistent with what the companies are reporting. And that's really what their main focus is.
Okay. Let's go to the next slide, David. I didn't realize that was the next slide. Go to the next slide. So, you talked about different sources of data. Are there any others that are important?
Yeah, I mean, there are a variety of different sources of data that are important. Obviously, there's technical data, there's global economic data, there's industry-specific data. Even more so now, you're starting to see information in terms of environmental data and how companies are performing in that realm play a role in investment decision-making process, pricing. So all of that comes into play in terms of the decision-making process that investors are using.
But probably needless to say, financial statement data still is a critical data set or critical source of data. Would that be correct?
Yes, it's the backbone by which most investment decisions are made.
Okay. Thank you. David, next slide. One of the things that sometimes we hear is that, the data from large companies is important and it's not so important from small companies. And, Glad, I'm sure as you know that there are a lot of sophisticated investors, institutional investors following large companies, not nearly as many following small companies. In fact, some small companies really aren't followed that much at all. So from your standpoint, as someone who sells the data to others, how important is the data for small companies versus that for large companies?
It's extremely important. In terms of the marketplace, you want to have a full breadth of consistent quality financial data across the board in order to do good peer-to-peer analysis and to understand what's going on in terms of the financials of a company. it's important to know that these small companies are going to be the large companies of the future. So in order for you to have a good understanding of what they're doing, how they're doing financially, how they're structured, what their growth rates are, you need to have the same amount of data and information that you get from large enterprises as well. So it's clearly important. It is a mechanism for you to do your analysis in order to make your decisions. So if you don't have that information for small companies, you're going to not be able to make the proper decision and maybe even miss out on some of the companies of the future.
Okay, so as I listen to your response, I would come to the conclusion that data from small companies might even be more important than data from large companies. Would that be correct?
I would say that they have they have increased value because they're lesser known, but you know, you want the equal set of data and information across all companies so that you can make a good fundamental decision. So you want it to be equal. You want them to be available, and so that you can do proper comparisons and analysis. So yes, it is important, and in some cases they more important because they may be lesser known. So if they don't hit your radar, you'll never know.
So you'd be missing an important component if you didn't have them. That's
yes,
probably,
we would.
Yeah, okay. Next slide, David. So, I know that you consume XBRL data. So Glad, can you just give us some background on when you started working with XBRL data, what your experience has been?
Sure.
What markets you consume it from, that type of thing.
Sure. We really began using XBRL data in 2009 in some of the Asian financial markets that were early adopters in Japan and Korea. Around 2013, we started to ingest US XBRL financials and incorporate that within our workflow and our processes. We didn't process them initially because there were some issues in terms of the data and the data quality. But over time, we saw improvements there, and we saw an opportunity to incorporate that within our workflow as well. So we currently have the U.S., Japan, and a number of other markets that are coming online. Most recently, Mexico, which is a new adopter to XBRL.
And when you look at those other markets, can you contrast those markets and the U.S. capital markets for me? Are there markets where it's easier to ingest the data than others?
Yeah, I would say so. I think the U.S. has been one of the more complex markets for us to use XBRL in terms of ingesting it versus some of the other markets such as Japan and some of the other markets which have a little bit more of more standardized in terms of their presentation, more consistency in terms of their tagging, which has allowed for increased comparability, and actually incorporated a simpler ingestment process in terms of processing those files and incorporating those into our database and out to our clients.
So the key has been their data is more standardized, if you will, than what you see in the U.S. data?
Yeah, it's more standardized, more consistency in terms of the elements used, less dependency on company-specific extensions. I would also say, though, that some of the other markets have not given the full breadth of financials as much as the U.S. So where the U.S. has been more complex in terms of the number of items that they are required to tag and the breadth of the data that they require in terms of tagging, some of these other markets have been a little bit more patient in terms of giving that full breadth, but they have emphasized a little bit more on the consistency of the information that they do require.
Okay. Very good. Thank you. Next slide, please. So when you look at XBRL data and you look at HTML data, What's the difference? How does it differ from, how does XBRL differ from HTML data from your perspective as a data aggregator?
Well, with HTML data, there's a lot more of a manual data collection process, obviously, than XBRL. Obviously, we are collecting financials globally, all over the world. So we have analyst teams all over the world going through documents, PDF, HTML documents, in order to acquire the financials that we incorporate in our databases. XBRL provides improved efficiencies in terms of acquiring data, ingesting that data into our database. And we've seen some improvements in the workflow as a result of that. In terms of our timeliness, in terms of our ability to get the data out to our clients when we use XBRL. So in that sense, we've seen some improvement in our efficiency in our data collection process using XBRL versus HTML or PDF.
Okay. Next slide, David. So once you take the data in, once you ingest the data, give us a sense of what you do to prepare the data. I think, we hear a lot about normalization of data. So can you help me understand just what that really means?
Sure. When we get the data, we obviously go through a series of validations, error checks, some of the things that were mentioned in the previous session before ours. We're looking for inaccuracies, making sure that the data is accurate and valid. We are going through normalization process because we know that we have certain elements that are not tagged based on the standard taxonomy, but are company specific, and we need to identify those and go through a process of matching those up to a standard set of taxonomies so that we can incorporate that and ingest it and make that comparable in our database across the board. So there's a process, a number of rules, a number of logic and algorithmic rules that are put in place so that we can incorporate and ingest that data.
Interesting. You said something that I want to follow up on. You said that when you go through this normalization process, that company-specific extensions, you look for, I think I understood you say that you look for a standard element in the taxonomy that would be suitable for that particular disclosure.
Yes.
I understood that correctly.
Yes. Yeah, we're trying to normalize that so that we can bring it back to a standard to taxonomy, so that we can incorporate that into our workflow.
So, Glad, when you do that, do you see instances where you think that perhaps an extension was unnecessary, that a standard element would have sufficed from your standpoint as a consumer of the data?
Yes, I mean we've seen a number of different instances where maybe the proper use of the standard taxonomy element would have been proper in a number of those different cases versus the use of a company-specific extension. So that's one of the challenges that we face in the U.S. more so than in some other markets.
So, and I assume that when you encounter an extension, that requires a level of manual intervention to determine what the appropriate normalization would be for that extension. And do you ever see instances where the use of an extension added value for you as a consumer of the data?
In rare cases, but most of the time, I think a standard element could have been used. The basic gap concept is pretty well identified, because at the end of the day, we have to rationalize it back to a standard element anyway. We find that sometimes the use of the extension was maybe not necessary for the most part.
Yeah, one of my favorites is there's a company that will remain nameless, although perhaps can be identified by what I'm about to say, that has a significant source of revenue, that is sales of damaged corn. So I would say that's probably rare that you had companies that derive revenue from sales of damaged corn. In that case, and I know there's not a standard element. I looked and was shocked to see that there wasn't one. But given that there wasn't one, how helpful would it have been to you as a consumer of the data if in that instance, that being one of those rare instances, if that extension had been connected to a standard element, say in this case, sale of products?
Yeah, I mean, ultimately, that's what we're going to do with that item. Ultimately, the description of the item has value, but ultimately, the fact that it is still a revenue item, it's still a revenue item, right?
Right. So, if in the example I just gave, if they had used a standard element, again, say they'd used revenue from sales of products, and had, instead of using the standard label for that element, had changed the label to be revenue from damaged corn.
Yep.
I'm assuming that would have been equally useful to you and would have served the purpose.
Exactly. It would be equally useful and serve the purpose. We would have still reported the as-reported description, providing the level of contextual detail behind that, and still being able to provide a comparative tag, for analysis.
Okay. Next slide, please. So, as chair of the Data Quality Committee, we set out to address some of the quality issues. One of the first things our data consumers on our committee, and by the way, the majority of the members of our committee, I think it was probably clear as we went to the membership, a majority of the members are data consumers. And ultimately, XBRL data, the reason for having XBRL data is to provide or facilitate automated ingestion of the data, whether it's by the regulator, in this case the SEC, or by data consumers such as your company. And so the first thing we did is they told us a priority for them was to just find and detect and get corrected the what I think of as clerical errors. So Lou actually talked about some of those types of errors, but it's negative values, it's inappropriate member access combinations, things that scale errors. You see some rather interesting scale errors sometimes in the data that kind of scratch your head, because you know that that's not an error they would have made in the HTML financial statements, just like the negative value is not an error they would have made in the HTML financial statements. So kind of scratch your head as to why. So what for you, what are the data quality issues first that cause you to wait to ingest the data from the US? And then second, are things that are still perhaps of concern to you, things that you would like to see change? And then after that, if I just add one more part to this rather lengthy compound question, talk about what an improvement would mean for you and your customers.
Yeah, okay. I'll try to answer all three of those.
Okay.
First one, really, I think, we came across some of the same issues that were raised by Lou in the first section. We had incorrect signage where things that should have either been negative or positive or couldn't be negative or positive were incorrectly signed. We had issues of scaling where, the incorrect scaling unit or unit of measure was used. You had issues in terms of tagging, in terms of sometimes the tags were incorrect or were not consistent with what the actual financial item was or what it was expected to be. So those created an issue for pause, and that's one of the reasons we delayed ingesting the data in 2009, 2008, 2010, 2011 or so in terms of the U.S. Also, obviously, company-specific extensions presents probably the major issue, major challenge that is faced really from the U.S. perspective in terms of making it comparable and ingesting the data and knowing what those elements are and what they mean versus those that are marked with the standard taxonomy elements. We have obviously seen improvements in the data quality over time that has allowed us to ingest the data for those markets in which we've gone live with. And in terms of improvements, obviously we saw reductions in issues in scaling, some reductions in the issues of signage. Obviously, I think some of the data quality committee efforts, obviously, with some of the vendors and some of the people that are preparing the actual XBRL filings has started to bear some fruit in terms of that. But ultimately, really, in terms of the U.S., so the main challenge that we face versus some of these other markets, more so than some of the other markets, has been the extensive use of company-specific extensions, and how that has made it a little bit more difficult to ingest all of the data as quickly or as simply as we would like to, in order to provide that to the end customer. I think one of the questions is what we would like to see changed. Is that, I think, another question I was asking there?
That's correct, Glenn.
Yeah. I think, obviously the things that we would like to see change and what we would like to express to users is that people are using this data. They are analyzing this data. Like you said, certain errors that you would see in the XBRL data that you would never see potentially in an HTML or PDF counterpart, or things that people need to pay attention to. We would definitely like to see a reduction in the use of company-specific extensions. We would like to see improvements in the consistency of the use of even the standard elements in terms of how companies tag and assign the elements to their financial statements. We'd obviously like to see improvements in the quantity of the information that's available in XBRL as well.
Well, that's interesting. So you'd like to see more than just the financial statement data tagged in XBRL. You'd like to see other information tagged with XBRL as well. Is that correct?
Yes. I mean,
and can you be specific about what types of information you'd like to see?
Yeah. I mean, there's a breadth of information from earnings estimates, from corporate actions, from the management discussion. I think can be enhanced with some of the tagging information. There's a rich set of information that's available in management discussion that could benefit from the use of XBRL. We would like to see some of the foreign filers here that are excluded from the SEC from filing in XBRL to include those as well. Proxy data. So we can go on and on. I think there's a number of different areas in which structured data has value, can provide enhanced sets of information, make that information more readily available to investors, more quickly ingested, and really provide people a better mechanism for processing and analysis.
Okay. David, next slide. The slide didn't advance, so I'll. This may have been the last slide. Let me ask you another question. As you know, the Data Quality Committee has prepared a framework to enable consistency and comparability of XBRL data. And there you go. There's the slide. And that framework consists of 5 guiding principles. And I know you've had a chance to read over it. Based on your reading of that, Glad, and I'll briefly go through the guiding principles very quickly, and I'd like your reaction to the impact that the use of those guiding principles could have on the data. So the first one is select standard elements based on the required disclosures under U.S. GAAP for public companies. That guiding principle recognizes that there are some common, widely recognized disclosures that are not covered under GAAP. Some of those are pretty mundane, like total liabilities. The second is that the modeling for disclosures be standardized. So you see instances in the data where disclosures are modeled differently from company to company, and that guiding principle is standardize those disclosures, the modeling of those disclosures. The third is limit the use of extensions to specific cases. In other words, don't use them except for well-defined specific cases. The fourth is that an extension, when allowed, be connected to a standard element using a mechanism in the XBRL specification. So that could be a calculation arc row, that could be a general things that you don't need to know about, but I'll list 2. General special arc row would be another. But a connection that would tell you as the consumer, as you ingest that data, you would know that that extension is connected to a standard element. So it's part of a disaggregation of the standard element. It's a subtype of the standard element, that type of thing. And then the last guiding principle is that the same materiality threshold or judgments that are used in the preparing the printed financial statements be applied in selecting standard elements for preparation of the XBRL documents. And the reason for that one is that there's what we've seen in practice is there's a lot of time spent trying to determine how to tag things that are actually immaterial. And frequently those are aggregations of a bunch of different things that are immaterial. So you'll see something like prepaid expenses, deposits, might be an example. So it's prepaid expenses and deposits, just to make one up. But it's immaterial. And another company might have the same thing, but they just call it other assets. And of course, then they use the standard element for their assets. And basically what that guiding principle means is that if it's considered to be immaterial, it's an aggregation of things and they're individually immaterial, then just use the standard element for other, if it's assets, other assets, if it's expenses, other expenses. So if you looked at and hopefully thought about those guiding principles, just give me your reaction, Glenn.
Yeah.
Now, I should add, you and I haven't discussed this before, so I'm interested in hearing what you have to say.
Yeah, I think when we reviewed those, I think for the most part they're consistent with a lot of the things that were mentioned here in this discussion. We talked about limiting the use of company-specific extensions. There's a need, in Principle 4, there's a need if a company-specific extension is required or a company deems it to be required, linking it to a base taxonomy element would significantly improve the ingestion process and the analysis process from a data provider such as ourselves or anyone else who's ingesting the data. Because right now it requires a lot more normalization and a lot of additional effort in order to ingest it. If there was more of a guidelines in terms of how elements should be used and how they should be applied in different circumstances, so there's less of a confusion for the person creating the filing in terms of trying to determine which is the best element to use in this case or that case. That all helps. I think the one thing I liked about the framework is it was a holistic approach. There wasn't just one thing done. There seems to be a well thought out process in terms of trying to improve the overall result of the XBRL filings to its end goal, to allow for data to be more easily extractable, automated in terms of processing, and still be accurate, and also work on improving the timeliness by which data and financial information is available to the end user. So in almost every case, I thought that they were well written, well thought out, and very consistent with some of the things that I mentioned here today.
Yeah, I think so. The fundamental premise of the framework is that U.S. GAAP for public companies provides for uniform disclosure requirements for similar events or transactions. And as the framework itself states, there are two objectives. One is to provide for consistent tagging of the data, thus providing comparability for the tag data. And the other is to simplify the tagging process. And hopefully the guidance that comes out using that framework will accomplish that. Guidance that's being developed now based on the topics in the FASB codification. We only have a couple of minutes, and we have some questions, and we'll try to respond to all of these in one form or another. The first one is a question about the efficacy of the first two sets of rules. And I'll take that one then, because I'm going to give you one that I think is a really interesting question. But to answer that question, we've now issued 3 sets of rules, as you heard today. And the analysis after the filings in the first quarter of 2016, so primarily calendar year and 10Ks, was that the errors that those rules were designed to detect, when you compared the number of errors in the 10Ks filed in 2016 to the number of errors or potential errors, I should say, in the filings for 2015, comparable filings, was a 66% decrease in the number of errors. Now, what we've seen since then is, and I don't have the percentage, but what we've seen since then in our analysis is a further decrease in the number of errors that those rules are designed to detect. The second and third sets that came out don't cover or don't have the same impact as the first set. And we'll have that analysis at the end of the first quarter. We shared that information with the SEC. We've discussed it with them, and I know that it informs some of their decision making based on those discussions. The second question, and we're just out of time. I'll see if we can squeeze this one in very quickly. The question was, glad this is for you. How should tagging a filer's MD&A enhance the end user's ability to compare data amongst companies when much of what is discussed isn't a one-to-one comparison? In other words, isn't necessarily consistent across companies, I think is what that is intended to say.
Now, I think where we're talking about the management discussion is ultimately there's a number of valuable sets of financial information that is increasingly in demand that's really off of the main financial statements, income statement, balance sheet, and cash flow, and are found within the management discussion. And if that can be structured in a better way, if it can be enhanced in its tagging, it allows data providers and others for us to collect that information and make that information more readily available to the end user. And so whether it be information about a company's environmental structure or information about certain decisions that the companies are making in terms of that, they all have extreme value if they're tagged and they're allowed to be searchable and allowed to be increase the ingestibility of that information.
I'll push my luck by asking you to respond to one more question. Do other countries require MD&A, and if they do they currently tag MD&A?
It varies between countries. There's a variety of different things that are tagged across different markets. Some markets even include auditors, information being tagged, while others don't. So it varies across markets.
Okay. Okay, David, I should turn it back to you and see if we can get the CPE questions and get those who stayed with us full credit. So back to you.
Thanks, Mike. I appreciate it. And thanks, Glad. Great discussion. The third of four poll questions should now be on your screen. Which of the following is not an activity of the Data Quality Committee? Which of the following is not an activity of the Data Quality Committee? Developing guidance on how to tag financial data using XBRL, periodic visits with members of Congress, or regularly scheduled meetings with SEC staff. Take just a moment. And I'm going to close that one down and go to our final poll for the afternoon. Again, if you're qualifying for CPE, please respond to this question. When did Thomson Reuters first begin bringing in XBRL from US companies? Was it in 2009, 2010, or in 2013? When did Thomson Reuters first begin bringing in XBRL from US companies? And I'm going to close this poll out. I'm going to, again, thank our panelists for today, Lou Roman, Mike Starr, and Vladimir Sully for their presentations and for touring us through the Data Quality Committee's efforts to develop rules and guidance for public company filers. You can get a look at those rules and guidance by going to xbrl.us/rules-guidance. I know it's a longer URL on your screen, but that shortcut rules-guidance will take you right to the approved rules. When we do have a public exposure, you'll be able to link right into those pages as well and take a look, provide feedback. The committee meets regularly. I think somebody mentioned it, either Mike or Lou mentioned it, that the committee meets regularly. We post those meeting minutes. Once they're approved, we also post the agenda for upcoming meetings. And just a quick note that the next Data Quality Committee meeting is on April 19th. So check us out, register to attend that meeting, and get a listen to what the discussion is at table. Again, my name is David Torriello. Thanks so much for sticking around this afternoon, where you'll get details on a replay for today's event, as well as some information on upcoming webinars and a follow-up note that it should land in your email inbox tomorrow. Thanks so much, everybody. Bye.